All right, guys, welcome back to the channel. Today we're talking about 5 ideas that you can do for passive income with $100 per or less. Now, some of these ideas are going to be more passive than others. Some of these you can just put into an account and start earning interest. Others are going to be more active. So with that disclaimer, let's get started here. Because one thing I love about the internet is that you have the opportunity to, say, build a website like this. Now, this website that I built is not making any money, but we're getting about 3,000 people to come to it every month. And so if I can create something long term, perhaps I could maybe sell this to somebody someday. Or, that's another thing. You can build all these digital assets. And we're going to kind of get into that near the end of this video. So stay tuned. But check out Daily Investment Advice if you want free recommendations, insights on the markets, investing. We post content pretty much on a daily basis. That's why we call it Daily Investment Advice. With that being said, check it out, free recommendations and all that kind of stuff for you, no matter what you're interested in. Now, when it comes to savings accounts, that's the first thing we're going to talk about when it comes to earning passive income. Now, with this, most of the time you can find these online savings accounts because, let's face it, the average bank these days, I think, even with interest rates going up or, as they've gone up recently, a lot of banks and even credit unions are not paying that much. I mean, you might get like 1% to 2% on your money. There's like a local credit union around my area, for example. I used to work for them actually, and I kind of got insight into how much they're paying based upon your balances. And really, a lot of times, they're not paying very much. Let's just say that. So they might be paying 1% or 2%, but they're loaning out money at 7% or 8%. So they have a pretty good spread. Online savings accounts, the idea is they don't have as much overhead. They can afford to pay out higher interest rates. And with that being said, you can perhaps get an interest rate of 4% or 5%. I've seen roughly in that range. That seems pretty reasonable. And rates have gone up on some of these savings accounts as rates, have been going up in the last couple of years. Now, I know the Fed just recently cut interest rates, and so what might happen is that we could see these savings accounts start to decline in terms of the interest they're paying. But still, you're getting 4% or 5%. For example, we have 4.10. These are pretty much going to change as interest rates change. So this will go back down as, if the Fed keeps on lowering rates, for example. But yeah, online savings accounts, typically you don't even need $100. You might need up to $100 deposit for these types of rates. But a lot of times, I think for Marcus by Goldman Sachs and also UFB Direct, I can leave these links down below. But yeah, UFB Direct and Marcus by Goldman Sachs, those are just a couple of examples. I've had accounts with both of these guys, and they pay on a monthly basis. So you put $100 in, you're getting 4.57% annualized, but then they're paying that on a monthly basis to your account. So with that being said, that's the first way to earn income is through those online savings accounts. Now, the next one I want to talk about is options trading. Okay, so one thing I talk about a lot on the channel is the wheel strategy. Now, the wheel strategy involves doing covered calls and cash secured puts. The problem is if you only have $100, you're not going to be able to do the wheel strategy by itself because you're simply not going to have enough capital to do so. So typically with the wheel strategy, if you buy a stock that's at, let's say, at $25 per share, you have to be willing to at least buy 100 shares. So that would involve, let's say, $2,500 in capital to do a trade like that. That could be for ETFs or stocks. With that being said, that's the next thing I want to get into is instead of doing this manually, right, where you're doing the wheel strategy with only $100, where it's going to be impossible because you can't even afford to buy 100 shares of, let's say, a $25 stock or a $10 stock even. That would require, $1,000. But what it essentially it's a combination of covered calls and cash secured puts in rotation to earn income against stocks or exchange traded funds. But one thing you can do, even though you can't really do it yourself, is you can buy an ETF like this, for example. Now, this one is going to be focused on covered calls. So this ETF is called the Nuveen NASDAQ 100 Dynamic Overwrite Fund. And one share of this ETF only costs $30 roughly. So it's trading at right now, I think $32, if I'm not mistaken. Or, I'm sorry, $25. So this one's actually, $25.19. So in this case, you could just buy one single share. And if you wanted to buy 4 shares of this, you're not going to earn much, but the idea is this thing pays even a higher yield than those savings accounts we were talking about. This one pays 6.68%. And so it incorporates the options trading into the strategy, and then you're going to get paid out those dividends. Now, this one pays out on a quarterly basis. So keep that in mind. You'll get paid every 3 months, but you'll see for each share that you buy, you're going to get 42 cents paid out every 3 months. And so on an annualized basis, you're getting over $1.60 on your, as you'll see, the annual dividend right now is $1.68. So if you bought 4 shares, you might get paid, let's say, $6 or $7 a year. Not much, but it's a start. And you only need to buy 1 share if you wanted to. That's only $25. So it's anybody can do this. All you have to do is like go to Fidelity, open a brokerage account. And then you can also, here's another example of an options-based ETF, the JP Morgan NASDAQ Equity Premium Income ETF, or JEPQ. I have talked about this one on the channel, but you'll actually be getting paid on a monthly basis. This one has an annual dividend of over $5 a share, a dividend yield of 10.85%. So if you're looking at this and you're saying, okay, the savings account's paying 4%, this one is yielding 10.85%, but 1 share of this costs $54. So in this case, you would get over $5 for or almost $6 a share for each share that you buy. So if you bought, 1 share of this for $54, you would get back pretty much $5 or $6 a share. And that's paid out every single month. So the total annual would add up to around that $6 amount. But yeah, so if you don't have enough capital to do the wheel strategy, and check out my recent videos on the wheel strategy and different examples of how this trade could be used, because it is a very powerful strategy, especially as you start to build, let's say, a Roth IRA, or something where you can do this in a brokerage account. If you go to Fidelity or Schwab and open up an account, anybody can really do the wheel strategy, or anybody can buy an ETF like JEPQ or QQQX, which kind of uses those options to make regular income. So that's the second way you can earn income. Now, getting into the third way, REITs, real estate investment trust. And so the idea with real estate is that real estate can be very expensive. Buying a home these days, I think, is more expensive than it has been in, I want to say, 40 years, based upon where interest rates have gone, and also the fact that housing prices really have not come down. In fact, I think in a lot of markets, housing prices are still going up. We're starting to see cool downs in Florida, especially with the hurricane, or the hurricanes that have happened, unfortunately. But that's just another factor, right? So when we're looking at real estate, we're thinking to ourselves, well, real estate's really expensive. I could buy a rental property, but I would have to fork up a huge down payment. And then I'm going to owe money to the bank. I probably don't have enough money to actually purchase a rental property in cash. There's like apps out there you can download and you can get fractional ownership. But one of the easiest ways to get invested in real estate, where you don't have to fork over a lot of money, is simply to buy real estate investment trust. And so these are basically, if you look at the definition, according to Investopedia, a real estate investment trust is a company that owns, operates, or finances income-generating real estate and sells shares to raise capital to do so. And so if we look at this, they can invest in a wide range of property sectors, and it allows you to earn income, as we were just talking about, from real estate without having to buy, manage, or finance properties themselves. So these were created by a 1960 law, and so it just makes it much more accessible to smaller investors to, say, invest in a portfolio of skyscrapers, shopping malls, apartment complexes, warehouses. For example, Stag Industrial, and this is a REIT that I've talked about on the channel. They pay on a monthly basis, and this REIT has been investing in warehouses, e-commerce facilities. They lease it out to major companies. They get the rental income. With e-commerce and the boom of e-commerce, I think this could be a great REIT long term. It has been paying those dividends quite consistently, about a 4% yield right now on a monthly basis. If we look at the annual dividend, you'll see how much it pays per share, $36 a share, and you'll see that these dividends have been paid out every single month. They have not cut their dividend, so you're getting that consistent income. They've even increased their dividend in recent years. We also have O, or Realty Income. Now, this one is kind of diversified across the board. This is probably one of the largest, or one of the, the most popular REITs. It's also what's called a dividend aristocrat. We'll get into that in just a minute here. But this is one of those REITs where they also pay on a monthly basis, and so you're going to get consistently increasing dividends, or at least that's what we've seen. And if you kind of think about investing in real estate as getting like rental income, that's kind of how you can think about it. For each share, you're going to get 79 cents on a quarterly basis. But I do believe if we look at the monthly dividends, yeah, every single month, because they actually pride themselves as being the monthly dividend company. So people who invest in Realty Income can expect those monthly dividends that have been steadily increasing over time. So although these are not recommendations, I just wanted to point these out as some examples of how you could get invested in real estate for less than $100. In this case, less than $60 for a share of Realty Income, and less than $36 for a share of Stag Industrial. And boom, you're already invested in real estate. You can now call yourself a real estate investor. And if anybody asks you, just say you own a diversified collection of real estate, right? So that's about $100, one share of Stag Industrial and one share of Realty Income. So another way you can do this is through exchange traded funds. Now this right here is the Vanguard Real Estate Index Fund ETF. This is going to be $93 per share. They pay every 3 months, I believe, on this one. So quarterly dividends or quarterly rental income, whatever you want to call it. Basically, what you're going to be getting is a diversified collection of all kinds of different REITs. And so instead of hand picking a REIT like we just talked about, Stag Industrial, Realty Income, you could have Stag Industrial, Realty Income, and 25 other companies combined into this ETF. And so I'm not sure how many companies are actually in this ETF. I'm just using that as an example. But if we look at the dividend, it is on, I guess, the lower side for the yield, 3.49%. And you're getting paid those quarterly dividends. The annual dividend is over $3.25. But hopefully, and as we've seen, these dividends have gone up consistently over time, indicating that they're investing in the right types of REITs and that those REITs are also themselves increasing those dividends since they're investing in that broad, diversified collection of these REITs. So that's the third way, is through real estate investment trust. If we look at the next way to make passive income, that would be through dividend ETFs and stocks, or individual stocks. Now, a dividend stock is a company, so a real estate investment trust is also a company, but the difference is there's different laws that govern, dividend payouts on individual stocks. You have qualified dividends versus non-qualified dividends. That's another discussion, but basically what it comes down to is how much tax you pay. And so the general rule is that if you're buying a company that trades on a U.S. exchange, and they've been doing so for, let's say, several years, like the New York Stock Exchange or NASDAQ. It's an American-based company that will typically qualify you for those qualified dividends, which are going to be at the lower tax rate. Real estate investment trusts do not have those qualified dividends. So that's another consideration. It's more of an in-depth discussion. But with that being said, you can always invest into dividend ETFs, kind of like V&Q we were talking about. This is the Vanguard High Dividend Yield Index Fund. So this one will just invest in a broad range of companies out there that all pay dividends. Every single company in this portfolio should pay at least some kind of dividend, and they're trying to get kind of a combination of growth and income from this ETF. One share of this does cost a little bit more than $100, $127. There are cheaper options out there. I think SCHD is one here, for example, that only costs $28. So the Schwab U.S. Dividend Equity ETF, investing in those U.S. companies that have a consistent track record of paying dividends for $28 a share, you can get invested into this one. If we look at the actual dividends they've been paying out to shareholders, this one right here, so believe it or not, they have a dividend yield as of right now, 10.74%, a dividend annual of $3 per share. So this one, VYM doesn't have nearly as high of a dividend. And I find that interesting because if we look at the most recent dividends based upon what they're paying out and based upon their share price, these dividends are just huge relative to the share price, right? So that results in that higher yield. But really, if we look at the performance, sometimes when you see a higher yield, you can maybe expect the share price not to be doing as good. But over the last year, we're up over 20% almost. So, we're looking at some really solid dividend yields in relation to the share price. I'll just say that. So this might be an option for somebody out there who's looking to get that diversified exposure. We're looking at, almost a 20% return here in the last year. And we're getting roughly a 10% dividend yield. For the average investor, I would say, they're going to get pretty excited about that. At least I do. I'm kind of a nerd when it comes to this stuff, but that's very interesting to me, relative to V&Q. And like I said, these are not recommendations. VYM, not V&Q. these are not recommendations, but if we look at $127 share price, a much lower dividend yield, over the last year we're up 22%. But just the fact that VYM, SCHD, you're getting so much more income or so much more yield initially relative to VYM, I find that very interesting. But these are examples of ETFs you can invest in: the Vanguard High Dividend Yield Index Fund and also the Schwab US Dividend Equity ETF, for a combination of both growth and income from your portfolios. Now, we can also look at individual dividend aristocrats. Okay, so these are companies that have paid dividends or raised their dividends for at least 25 years. So they both have paid and raised their dividends consecutively for 25 years or more. Examples of these companies include, if we look at the massive companies out there like Chevron, Clorox, I'm sure you've heard of these companies probably, ExxonMobil, T. Rowe Price, Franklin Resources. All of these companies are high quality, long-term businesses that have been around for decades, and they've been able to consistently increase dividends to shareholders. And so I do encourage people, if you're looking at stocks out there that you can maybe own that have a competitive moat, that have been around for a super long time, I think McDonald's would fall into this category as well. People have been eating McDonald's for decades. Children, their parents, my kids are already eating Happy Meals. I mean, it's just one of those things where they have that competitive moat, and they can raise their prices too, because they know that ultimately, even if there is a recession, I think people go to like McDonald's for comfort, right? Comfort food. And so we have this idea that there's a competitive moat around these companies, and they can consistently increase those dividend payouts to shareholders. And so that's the idea here, is you want to get that long-term growth with those dividends to where you can consistently reinvest those dividends even, and get the payouts, and just continually compound and snowball that wealth. And so it's kind of in reverse to, like, if you think about a debt snowball where you're trying to pay off debt because the interest is stacking up, you want to get rid of all that high interest, because ultimately, if you're a borrower, right, you're paying all that interest and it's compounding. Well, the same thing is in reverse when you're actually getting income into your portfolio. It can substantially increase over the long term, especially if you're reinvesting and compounding that growth. So that's another way to earn income. Now, the fifth way, passive income. So YouTube, right? Now, YouTube is great. I've done YouTube off and on since about 2020. I built my first channel from 0 to 10,000 subscribers. That channel was doing $500 to $1,000 a month, roughly. I got super busy, and I just, it's not monetized currently because I haven't posted on it in a long time. But at the time, it was doing okay. I was doing now this is going to be more of an active income stream. You're going to have to put in the work. In fact, this is the most active income stream of them all. But it can also be passive long term, because if you're looking at YouTube from the perspective of, if I post a video, each video can be like a miniature piece of real estate. So you can think about it, something where you're getting, lifetime on this channel, for example. I've earned over $200 on this channel. So I just got monetized recently too, so that's part of it, right? If we look at the analytics of some of these videos, how much have they actually earned? If you look at, you can kind of deep dive this and see, like, okay, well, this video got 3,000 views. If we look at how much it's actually earning, or how much it's earned since published, $46. And as you can see, those earnings in the last, month, let's just say I've gained another $10 on this video, even since October 20th, right? This video has 15.7K total views. But since October 20th, today's November 3rd, I've already earned another $10 from this video for doing absolutely nothing. And keep in mind, over the last 48 hours, this video has gotten 153 views. This video was published, if we look at when this video came out, it was actually a while back. And I forget exactly when I published this video. How long ago was it? To be honest, I think it looks like it was in April of 2024, I guess. Yeah, so here's when the video was published. First 3 days, April 15th. So since April when I published this, it's gotten 15.7K views. And to be honest, I forgot all about this video. I'm actually quite surprised that I've gotten this many views on a 6-minute video that is still earning revenue today. And it seems to be kind of accelerating, which is quite exciting. And that's why I love YouTube, because it's more active in the beginning, but as you continue on, it becomes much more passive. And I feel like the more videos you publish, the better chance you get of earning that more passive income in the background, right? This is just updated, I think. 153 views the last 48 hours. I'll take it. You know, for a video that probably took me less than 2 hours to get the thumbnail done and all that kind of stuff. So already, I mean, we're seeing the results from our labor. And this is just very exciting to me. And I'm sure it's exciting to maybe you watching this, and maybe this will inspire somebody out there to start a YouTube channel and to just go for it, right? What have you got to lose? You know, it's one of those business models that you can start earning passive income from for less than $100 starting out. And so it's just very exciting to think about. It really is. So with that being said, guys, thank you so much for tuning into this video. God bless you all. Hope you're having a great day out there. Hope this helps somebody, maybe get some insight into different ways you can earn income, and to kind of get you into that mindset of thinking how you can do it yourself. And I hope this video helps somebody. Let me know what you think in the comments down below, and we'll see you in the next one. Take care.